What if one rectangle is all you need to scalp the 1 minute time frame? And that means entry, stop loss, and take profit is all based on one rectangle. And all of this is based on 4 simple steps. So let's start. So I'll be explaining the full strategy in just 4 simple steps. So the first step will be the first moment you look at the chart, and then the last step is being the entry and the trade management. Now the first concept that we need to understand is the strength and weakness. Now before we go into the steps, we need to understand the main core of the strategy. So we start with concept 1, then we have another concept to understand, and then we'll go over the steps. So what is strength and weakness? You can have a full strategy just based on this, and if you want me to have another video for this specific concept and then having a trading plan out of it, then just let me know in the comment. Now if we notice here, price was coming lower, so we have 3 candles going lower, and then price was going up. Now notice how price aggressively closed below the previous candle, and same thing here, and then price had a pullback to the upside, went lower, and now we have a swing low here. Now the swing low was broken aggressively, and this candle here closed below it. So whenever we have this, a candle closing aggressively below a swing low, or a candle aggressively closing above a swing high, that is actually what a strength is. In other words, a closure below a swing high or low, this is a strength, and then the weakness is going to be the opposite. So this means we have continuation. Closure means strength, means continuation. On the other hand, if we have price going lower, so price closed below, we have strength, and then strength here. So strength, strength, and then strength here. But here we have the swing low, and then price was unable to close below. Simply, it means that this candle closed with a wick. It closed above the swing high in this case. So this, on the other hand, is weakness. And weakness means that this is a wick, and it means that we could be having a reversal from here. That is the main difference between weakness and strength. Now, before we continue, more details and more secrets on these videos. I already made these 3 videos talking about the same strategy, but in different approaches and different methods. So make sure to watch all these 3 in order to gain more experience on this strategy here. And let's continue. So concept 2 is market structure, and a lot of people are already familiar with market structure, but we're gonna have a quick overview about it. What do we need exactly from it for this strategy here? So let's look at this here. We have a breakout structure, it means continuation, and a breakout structure means we have strength. We have another breakout structure, means we have strength. And then here we have a breakout structure, means the strength. Here we have kind of weakness, and here we have weakness. Now, what do you expect to happen here as price is going lower? Based on this, what we can see is that we have a breakout structure, and now price is retracing. So the trend or the structure is actually bearish here. So what I'm expecting is a continuation to the downside, and that's what we expect here. Now, same thing. We have a breakout structure here, and we have structure to the downside. What do we expect? A bearish move as well. Now, how do we use our strategy to this? Simply, when we have a bullish structure, so from here to, for example, here, what we're going to be looking for is a continuation, and we're going to be focusing on the lows. So if price takes the low, we're expecting a continuation. We're expecting the trend to continue. When we have a bearish trend from here to here, what do we expect after? We're expecting a continuation to the downside. So we'll be looking for the weakness in the direction of the trend. Here's the weakness. Now we have bearish structure. Where do we have the weakness? That is inside of this range. It is here. Continuation. And where do we have it now? Here. Continuation to the downside. So simply, price is going up, and then we have a bearish structure. What I'm expecting is weakness here to continue within the main direction here. So this is what we need to apply from market structure to our strategy, to the one rectangle. So let's start with the first step, and that is identifying valid highs and lows. And when I say valid highs and lows, it does not mean just any high or low, because we always want to focus on high probability conditions. So we need to actually focus on valid highs and lows. And valid highs and lows could be highs and lows that are within the structure or the trend. And this is something that we already explained and we went over. Highs and lows that are inside of imbalances. That is another way. And sessions highs and lows as well. So we could have this. But in general, I would say the main rule is highs and lows that are going into key levels or near key levels. So that is the main thing, because if you notice, imbalances is a key level. Structure is going to have a lot of key levels inside it. Sessions highs and lows are key levels. The main rule is that we want to look for highs and lows that are near or into key levels. And again, these could be actually anything. So part of your trading plan, you want to think about this. But in the examples, I'll show you how to actually identify this easily. Now, step 2 is to identify the weakness, because we are always looking to trade the weakness. We're not going to be trading the strength. We're looking for reversals of lows or reversals of highs, but within the trend. So we're identifying the highs or lows, and then the moment we identify, we'll have alerts around these levels. And then whenever price goes to that level, so for example here, price went to the low, but then started to go higher. The moment this candle closes, we're going to be using 15-minute time frame for the highs and lows. This is the only time frame we can use here. As price closes above this, this is simply step 2, is to identify the weakness, and we want the candle on the 15-minute to close. Now the third step is to draw the rectangle. Now again, the rectangle is gonna identify the entry, when we're gonna be pulling the trigger, when we're gonna be entering immediately, and then the stop loss is gonna be above or below, and then the take profit is going to be away from the rectangle. So we're going to be explaining this on the examples as we look for a trade. And the last step is very simple, and it's going to be also based on the rectangle. So it's going to be the entry and the trade management. Now entry is going to be based on the rectangle. As we draw the rectangle, we're going to be identifying the entry immediately. And then the trade management means that where are we going to be setting our stop loss, and then our take profit, and when do we go break even, and how to identify potential take profits levels. So now we're going to be looking at examples, and we're going to be explaining all the steps and details. Now these are the steps here. I'm going to have them on the right. The first one is going to be highs and lows, identifying them, then identifying the weakness, drawing the rectangle, and then having the entry. There's going to be always here in order to go over each one at a time. Now let's look at here. Now simply I can see that we have this valid market structure here, which is on Asia session. We have price kind of just going 2 candles above a high and then going lower, aggressively breaking structure. Now for this, we already identified that we have high and then a low that is part of a good structure. We have this key level. Notice what happened. Price reached the key level first, but then started going lower. And after that, what happened is price having weakness. Notice this candle here going above, taking the high, but never closed above it. Now, one thing that I forgot to mention is that the weakness needs to be on the same color. So if this is a high, then we need to see a bullish candle. If it's a low, I need to see a bullish candle. Now let's look at this. First of all, we identify the high, and then here as this candle closes, we identify the weakness. So step 1 and step 2 are there already. So now what do? We identify the rectangle. Now what is the rectangle? It's simply, so here's the rectangle. You always want to have this. We take it from, you see this candle that created the fake out, that created the weakness. Now we're going to be taking it from the closing price of this candle, which is here, until the high of the candle. So this is the high of the candle, and this is the closing price. This is the rectangle. It's going to actually, identify everything for us. So you'll notice how the entry is going to be from here, and then the stop loss and everything. Now, if we have a bullish scenario, how it's going to be? Let's actually look at a bullish scenario, for example. So I'm going to take a quick example here, for example, and here. A low that took this low, and also we have weakness, as well as this. Where do we have the rectangle in this case? It's going to be from the closing price to the low, and then drag it to the right. And this is actually, it looks like a valid example here that we can actually cover later. Now, for this one here, what are we going to be doing after drawing the rectangle is the entry. We're going to be now switching to the 1 minute time frame. And the entry is going to be very simple. The moment we close out of the rectangle, but it needs to be on the direction of the fake out or the weakness. So the weakness is to the lower side. That means I want to see 1 candle closing to the lower side, below the rectangle. So the moment I see a candle closing below, that's going to be my entry. Playing the price action, this is 1 candle closing aggressively. We can take here. Stop loss is going to be above the rectangle. And then take profit can be the next high or low. Now for this one, to be honest, I'd really prefer to look for kind of a retracement to get a better entry, because this is a strong candle here. So a lot of times I would really prefer to see retracement in order to get higher reward to risk. Playing this price action, now for this one, you had to enter here. There was no retracement. And then if you notice, price just immediately start going lower. Now for this one, I might actually skip this because this takes a lot of the reward to risk. But if I had an entry from here, there's gonna be around 3.7 or 4 to 1, but it gives still around 2.5 to 1. and then it actually continues lower, and it's still with a bad entry, it's still about 3.5. And that's how the trade looks on the 15-minute. Zero drawdown, 4.4 to 1, and that is a huge trade. Now, if you go back here, a lot of opportunities here, but this one is part of structure. If you notice, pullback going higher, and here we can spot that we have weakness. Now, this weakness is also inside of an imbalance. That is one of the high probability scenarios that I've talked about. So inside of an imbalance, taking a low. Let's see. This is the rectangle here. Now, sometimes the rectangle is going to be very big. And if I have valid structure here on the 1 minute and I understand where to look for an entry and where to have a better stop loss, I can have a better stop loss, maybe depending on the 1 minute structure. So let's see what happened on the 1 minute in the price action. Okay, this is closing above. So mechanically, yes, it's an entry, but I prefer to see a better one. Or if I'm really confident about this, I can enter immediately here. So this could be actually an entry mechanically, I would say. In the price action, this could be a valid one instead. So I could have an entry here. Stop loss goes below the rectangle. And then what can we target? Now we can actually switch to 15-minute time frame also to target another high or another low. In this case, I could target this high here, and that is a huge 8 to 1. Now I could go to 5-minute time frame and look for some other key levels. For example, price could actually kind of reverse from here. So it all depends on the risk I'm taking on this trade. So playing the price action here, I'd actually have it here, and then 50% of the target, I might actually go break even. Now switching to 15-minute time here just to make it quicker. Let's see what happened. Price actually start going higher. Okay, now let's see. Was this so the take profit I was looking for is 8 to 1, and we reach about 4 to 1. So almost 4 to 1. That is a good one. Now price after that started to go lower, did not hit the main take profit. But as I said, price could actually react off these key levels here on the 5-minute time frame. So price reacted off there, started to go lower. So that is another trade, valid one that we could have taken. Now that is another beautiful trade here on Euro dollar. Now I've already talked on other videos about using the moving average and other methods to use this, so make sure to watch the other videos. But mainly, you see, we have weakness here and we have a breaker structure. So now we have what? A high probability range. Price made the first pullback, and then after that, there is the weakness. So what happened is price breaking structure, then having a weakness here within the same trend, which is this range here. Now what do? We draw the rectangle, and then we go to the 1 minute time frame. So the first 3 steps are already done very quickly. Now we go to the entry, playing the price action. This candle aggressively close higher. Now for me, I either, I could miss the trade. I'd be looking to pull back to this level here. So a pullback here, I'd really prefer to see this. Otherwise, I'm not risking all of this. Or what you can do is go half risk for this and another half at the retracement. And then I'm looking for at least this here, or at least this one. So we could have another weakness here. So playing the price action, okay, so we do get the pullback here, and then after that, okay, another pullback, a bit of ranging here. Actually, we're gonna switch to the 15-minute time frame, see what happened, and then it hit the take profit within about 3 candles. Now playing the price action, so you see the potential of this. Yes, sometimes you can actually hold more. This gives about 6.7 maximum reward to risk. Thank you so much for watching the whole video. Make sure to hit the like button in order to help other people, subscribe to the channel, and leave a comment with whatever you need in the future. And also, if you want to learn my trading strategy, which is the edge model that I use now after 7 years of trading experience, and allow me to catch 5 to 1, 10 to 1, and even 20 to 1 trades, then make sure to visit my community, edgeschool.net. Thank you, and I'll see you in the next one.